large number of conclaves across the country. As he rightly said, the second, I think, is lined up sometime in the last week of May, I think. Four corporate conclaves are lined up, and we need to have a lot of workshops. Of course, he said something against workshops, I don't know, but we need to have a lot of seminars, conferences and workshops on the new Companies Act for us to really understand the provisions. And since we have the full year in front of us, as it has started from the 1st of April 2014 and it will be applicable for 14-15, so we have one full year to really learn the new provisions, so that we are in a position to really take off at the right moment when the year ends on 31st March 2015. Friends, once again I congratulate the EIRC for organizing this program. I thank the chief guest also, Dr. Navrang Saini, who has made it and will be addressing us very soon. And I also thank all of you who have come. In fact, this is the first big conference of the EIRC after Subhas took over, and the registration figures are very very encouraging, and I'm sure you will be enjoying these 2 days of learning. With this, I conclude, and I thank all of you for giving me a patient hearing. Thank you very much.
Thank you, Sumantra ji, for your initial remarks, and I have recognized the presence of another Central Council member, Sri Abhijit Bandyopadhyay, and may I request him to speak a few words for 2 minutes, please. And I also recognize the presence of my other council members here, Anirban Datto and Ranjit Agarwal. Abhijit Bandyopadhyay, please. Sir, just for 2 minutes.
Well, good morning to all of you. Thank you very much for acceding to our request to be here. I just came in because my session is tomorrow, and I was getting ready for that. I thought I'll just come and see the hall, which is newly launched in this Lalit Great Eastern. Good old days, I have a lot of fond memories, but I am really amazed to see this hall and such a good audience. I feel the credit should go to the Companies Act, and suddenly I'm told that you should say a few words in 2 minutes. I only look at that fly high. I don't know who is flying high. I feel the ministry people are flying high, I'm sure, because they have made a very good act after a long time, and it was like expected, anticipated. But there are many issues. I think next 2 days we'll be discussing, right from the directors are concerned, management is concerned, management definition expanded, auditors, we are all auditors. There are varied views. Some auditors have concerns, some auditors have opportunities. Then we have the accounting procedures. Everything is redefined. And this was made in a very record time, I would say, this time. After such a long time, Companies Act has been revisited, and finally it has been notified. Credit goes to the ministry, definitely. Well, issues we'll discuss later, but all that I can say is, now the Act is in place. I'm getting at least 50 questions daily from my friends, colleagues, clients, non-clients, everywhere. The issue is which sections are notified and effective, which sections are not notified and not made effective, which sections were notified and then stretched, delayed. For example, anything relating to auditor's report, director's report, all these things have been delayed by 1 year. So any year, financial year commencing before 1st April 2014, the old Act applies. Now, question is 143(12) talks about reporting on fraud by auditors. So reporting part by auditors will be effective from 2014-15 financial year. It's clear. And the ministry has said it was clear, now it is absolutely clear. Even then, I think many people are there who are not even clear. Because 143(12) has become effective. It is notified. Now, this is a question of reporting by the auditors, not to the shareholders, not to the management, to the government. Now, whether auditors, if they come across a fraud which they believe, the exact phrase is the reasons to believe, whether they need to draw attention of the government. Because when they need to draw the attention of government, it's not auditor's report, it's a report by the auditors. But it is said auditor's report is deferred. Similarly, internal financial control, the auditor's reporting is deferred, which comes under 143(1). But then 134(5) is effective. So for list, it says director's responsibility. The directors of a listed company are supposed to define internal financial control and see that it is efficiently and effectively running, which includes inter alia conducting of business. It's a robust system which they are supposed to, and today it's effective. So the directors are really going, helter and skelter. They are saying that if that is effective, then we are supposed, yes, they are supposed to do it today. The auditor's reporting will be from the next year. So there are so many issues and so many, finer points. I am sure people are not very clear, and these type of seminars will go a long way. We are trying to help, trying to sort out. We have Dr. Saini, we have, number of seminars organized everywhere, and I am getting questions from different angle in different dimensions, different directions. Sometimes I give my views and say, within bracket, this is my personal view. Because I cannot say this is as a council member or chairman WSB. That becomes official view. So whatever we discuss today and tomorrow, I am sure, all will be our personal views. And we have a meeting, 21st, 22nd, a council meeting where we will discuss threadbare. And again, the issues will be taken to the ministry. One thing I can say, there are so many issues relating to accounting and auditing which we are taking up. Maybe yesterday you have seen that newspaper report that the 3 institutes, chartered accountant, cost accountants, company secretaries, are not happy with the new act. Well, it's the media which reports in that way. But the other flip side of this is that there are opportunities which probably they have not highlighted. So this is only the part of accounting and accountants or auditors. But there are other people involved. There are other stakeholders. Like CSR fund has raised more than 1,000 questions. I believe ministry is coming up with FAQ, frequently asked questions. So this is the time we should ask questions. And particularly to the members at the helm of affairs, somebody who comes from the ministry or somebody who is responsible from the institute to take it forward. So ask your questions. I am sure in a month's time this all will be answered. And I believe being the very first year, even ministry will take a lenient view. I would urge upon lenient view for any kind of non-compliance. I am sure there will be, if there are 1,000 laws, there will be 10,000 non-compliances, if you are very rigid. So I am sure ministry will also take a view on that. So ladies and gentlemen, thank you very much for acceding to our request. I believe it's demand-driven, need-based. So please enjoy the session. I'll be back tomorrow. Thank you.
Ladies and gentlemen, thank you Abhijit ji for acceding to our request and gave a remark. May I now request Vice Chairman Nilesh Vikamshay of Corporate Law and Corporate Governance Committee to be here. Ladies and gentlemen, just a small announcement. Please do not move out of the auditorium after this session. Will start immediately within half a minute or minute. Background material has arrived. It will be distributed on your seat itself by the volunteers after the unveiling of that background material by our chief guest.
Respected Chief Guest of the seminar, Dr. Navrang Saini, Regional Director. CA Abhijit Bandopadhyay, my senior council colleague, Chairman AASB. CA Sumantra Guha, my colleague in the council. Subhash Saraf, the Chairman of EIRC. PD Rungta, the Vice Chairman. Past council members, Gopal Dokania ji. Past chairmen of the Regional Council, CA Santosh Jain ji, CA Ranjit Agarwal, current Regional Council members, Secretary ARC Anirban Datta, my co-speaker, Khushru Pantaki, in the post-lunch session. He is right now immediately, and I am in the post-lunch session. It's a privilege to be here. Respected seniors, ladies and gentlemen. First of all, let me compliment EIRC for taking up this particular initiative immediately after the rules have started. The rules have just come in the end of March, and we are today on 18th of April. I think it's possibly the first such a large conclave which we have held all across the country, and I would want to compliment the ARC team led by Mr. Saraf to take this initiative. So full compliments to you, and to roll up 3-4 other seminars. One of the reasons I'm here is I was supposed to be here in EIRC in Calcutta last, I think, February. And again, my fellow speaker was Khushru. And because of some urgency, I had to skip it. And one of my colleagues chipped in on my behalf at that point of time. I said, this time also the same similar pressures building up. And Subhash was there in Delhi day before yesterday. And I just requested him if somebody else can step in, instead of me, I would be glad to move out and give the room to somebody else. But he insisted that I have to come. And I didn't want to ditch Calcutta and ditch EIRC for the second time. The commitment remained, so I came in. Coming to the Companies Act. Sumantra mentioned that it has not been debated enough. But I would just wish Sumantra, 2004, when the concept paper came under P.C. Gupta, the whole idea was of simplifying the Companies Act. That time, P.C. Gupta had a concept that 600 plus sections of our old Companies Act, it should be something like, I think, Dr. Saini, if correct me, I think the Malaysian law is something like 100 sections or something. So that time the concept was we should make it like the Malaysian Act. And from there it has traversed almost 10 years from 2004, and finally we see the light of the day. From those 100 sections, now we have got about 470 sections, 29 chapters, and almost 7 schedules. I was just trying to make a rough estimate of the number of pages which was there earlier and now of the Act, schedules and the rules. And there was about something like 700 pages then, and now it is more than 1,000 pages. So we know what we have a task in front of us, unlearning and learning. Another thing in this Companies Act, as everyone mentioned, was in the other acts, which we generally deal with, whether it is the Income Tax Act, we have the excise, the service tax, we have seen sea changes. When I say philosophical level sea changes, fortunately, unfortunately, the Companies Act from 1956 till date, almost 58 years, we had only incremental changes. We didn't see a substantive change. There were amendments periodically, but there was no substantive change. This is the first time in 58 years where there is a substantive change. And as everyone mentioned, almost 75% of the sections is going to be under delegated legislation, where rules will be notified and could be modified also from time to time, depending on the feedback and the practical difficulties. What does this act, result in? Humongous amount of enhanced responsibilities, be it corporates, be it directors, be it professionals like chartered accountants, auditors, company secretaries, name it, an enhanced responsibility. It is bringing in the new concept of NFRA, which is going to be parallel to the institute, more or less discharging similar functions. Still, it is not notified. We have represented that we, could do, without that particular NFRA, because institute is right now doing the same functions, and duplicity of regulation is not, called for. Then we have got a major challenge in section 185, 186. We have got a whole session today afternoon. How are we going to deal with it? Some concessions have been given for wholly owned subsidiaries by the ministry, but I think possibly some more is required. One of the major, I would say, change which I want to compliment the ministry is on streamline the procedures of the mergers and acquisitions. So once the NCLT comes in and the M&A procedures are, activated under the new law, I think the life of everyone will be very, very, smooth. The erstwhile process of going to the courts, etc., and the delays will be reduced. Immediately impacting us is something like depreciation, which has impacted us, a lot of changes there. One of the negative change which the ministry has rectified is on the continuous process plan, the useful life was reduced from 18 years to 8 years, and which would have been a huge impact on the corporates. Now they have modified it again back to 25 years. So this indicates that the ministry is, looking at the representations and considering it. They may agree or not agree, but they are definitely looking at the representations. As far as the private companies are concerned, which I'm going to speak in more detail in the afternoon, almost all the benefit privileges which were there for the private companies have been withdrawn, and we'll deal with it more in the afternoon. Friends, how many of you are in the practice side? How many of you are in the practice side over here? Majority? Wonderful. Just for your information, the auditing standards have become mandatory under the Act now. Until now, I think our focus was more on the accounting standards, to section 211(3)(c), compliance, etc., etc. And my belief, or my experience is that most of us are doing a very good audit. but our documentation needs to be improved a lot. When you look at especially the mid-size and the small firms. And with the auditing standards becoming mandatory, I would earnestly request you, kindly look at this aspect of our practice, where the documentation of what you have done, see, generally everything is in our mind. See, I'm a sole proprietor, I know, I've done the audit of a client, everything is in my mind. But is it there on a document? So that additional efforts and process and systems you'll have to put in place, you will have to, otherwise you'll not be able to substantiate. And till now, it was under the Chartered Accountants Act, it was mandatory. We used to have peer, how many of you have got a peer review done? Very few out of the people in practice. My request, again, earnest request is get yourself subjected to peer review. It's a friendly review. It is not a, so it will enhance your documentation. So kindly do that. Many new definitions coming up, consolidation becoming mandatory. Definition of associate company, subsidiaries have been changed, which we'll see in the ensuing sessions. Reopening of accounts. So the first time officially it's part of the Act. Initially it was done by the circulars. Now reopening has been given a focus on. Many times I think the general membership feels that what has been the institute doing in all those things. The Act came somewhere in 2008. The first bill was introduced. It lapsed when the Parliament was changed. In 2009 again reintroduced. So just for the information of the members, Institute has been continuously representing, not now, from 2010 onwards, after the 2009 Act was reintroduced in the Parliament. Institute has represented before the Standing Committee of Finance, where this has gone twice. To the Ministry also, various representations have gone. And thanks to those representations, some changes have happened directly impacting the profession, and some have happened which may impact overall in the law. And just to cite one instance, the 2009 bill, if anybody has a look, said rotation will be there for all companies. The word used was companies, the auditors' rotation will be there. We represented in 2010. Immediately in that discussions with the ministry, they accepted the logic and the principle. And then after that continuous representation, they have come to this particular stage. Even this, what Sumantra mentioned on the cap on the number of audits which an auditor can do, we have still not given up. When we represented, ministry accepted, as he mentioned, it went to the law ministry, and because of technical reason, it couldn't get, sort of more liberalized. Even now again, we have gone back, just day before yesterday, the president, vice president met the ministry for some other matter on the valuation issues. That time again, a representation was made on this cap issue, and the ministry is very, very receptive. They said they agreed, and now they're looking at, as Sumantra mentioned, on how to get it routed through the section 470, power to remove difficulties. One of our council members is on the rule-making committee, our chairman of the corporate law committee, C.S. Santana Krishnanji. He's been sort of representing the views of whatever difficulties we are going through. But only, even see what is happening is till now we are just wishing that the effective date will be late, etc. So now the fact is, out of the 470 sections, only 187 sections remain to be notified. Balance have been notified, something like 283 sections odd have been notified over various dates, 12th September, then February and March. So we have to live with it. So what is going to happen, as everyone suggested, there are going to be a lot of implementation issues, a lot of doubts, as Abhijit also mentioned. What we have decided at the corporate law committee is to collate all these issues. Just to draw what is happening. The accounting issues in the Act have already been identified by a subgroup of very senior professionals. They were escalated, discussed in the accounting standard boards. Wherever institute needs to change, in the institute we have instigated that process of amending the accounting standards, etc. Where we need to, refer to the ministry, we're referring to ministry wherever there are going to be difficulties, whether definition of subsidiary, etc. You've seen the change in the rules. Initially, it's a total share capital. Now, total share capital has been defined to say only equity capital and convertible preference capital. So, like that, I'm sure a lot of other things are happening. Abhijit Dada is also, on the auditing issues, whether it is frauds, whether internal financial control. Then we have reporting on pending litigations. A lot of other things which are coming up. So, already subgroups have been formed to come out with guidance to the members. And the other implementation of the questions, we are going to collate, we are going to, sort of prepare an FAQ, possibly, if possible, we'll run it to the ministry and try to take the blessings on the particular interpretation of it. For each and everything, we cannot amend the law or the rules. So wherever we feel it is less, important or trivial, we'll come out with the interpretation and we'll try to run it through the ministry that this is the interpretation we're having, take the blessings, and generally, take it back to the membership. Just on the lighter side, finally, if some of you are directors in companies, after the new Companies Act, I would suggest kindly, if you don't have the DNO insurance policy, the Directors and Officers Insurance Policy, kindly ask your companies to take that policy. If you're practicing professionals, if you're going to continue with corporate audits, my earnest again request would be, take a professional indemnity insurance. In fact, I don't know whether we saw the implications of this act, but almost 4 to 5 years back, the institute has tied up with New India Assurance Company. And the professional indemnity insurance, which is available, we are tied up with them, is available at 20% of the card rate, 80% discount, which generally all the companies are giving. And just for your information, one of my CA colleagues back in Bombay took out a 1 crore policy of sole proprietor. His number of people in his office is less. I think he's hardly paying 8 to 10,000 rupees premium. I think it's worth it if you're going to continue with this corporate audits and practice under the company law. With that, wish you a very, very happy learning for the next few days. Thank you.
Thank you, Nilesh ji, for your insights by working with the regulators directly. Now, ladies and gentlemen, I think for whom you are waiting for such a long time, our chief guest, Dr. Naurang Saini, Regional Director. May I request his to give his address and tell his insights about how he's perceiving this.
Thank you very much, Subhash ji. CA Subhash Chandra Saraf ji, Chairman EIRC, CA Pramod Dayal Rungta ji, Vice Chairman EIRC, CA Sumantra Guha, Member CL and CGC, CA Nilesh Vikamse, Vice Chairman CL and CGC, CA Abhijit Bandopadhyay ji, other Central Council members, past office bearers of the EIRC, ladies and gentlemen, very good morning to all of you. At the outset, I would like to convey my gratitude specifically to Subhash ji for calling me here in this corporate law conclave. Well, we all have been learning about the Companies Act 2013. Of course, so far we have been practicing the Companies Act 1956. But with the change of law, we all have to learn, including me. Let me tell you very frankly, we are not experts so far of the Act. And expertise comes with the practice, and that you know better because you are the practicing chartered accountants. So, for everyone, learning is required. And so, we are also learning, and lot of new things actually I have come across because we do not know the internal discussions of the institutes, which comes out when such types of the conclaves are organized. So thank you very much for giving some of the insights of the institute. And I can only say you that out of these discussions, so many new things comes out. And unless the things are brought to the notice of the competent authorities, it's very difficult to legislate the things. Now, few things about the Companies Act 2013. We all know that the Act contains 470 sections, 7 schedules, and so far 183 sections notified with effect from 1st of April 2014. 100 sections were notified earlier. Then now remaining are 187 sections only, which relates to NFRA, IEPF, compromise arrangements, winding up, sick companies, special courts, NCLT, etc. Now, we all know why these are pending, so I need not to deliberate on that. And once the things are clear, I think the ministry will notify the remaining sections also. In the Act, we all have seen that central government have to make rules, and of course, rules have been notified also. So at 363 places, it is written that the central government to make rules, and rules, we all have seen the notifications about the rules also. 460 places as prescribed. Now, why these are required? If you see the Act of 1956, it was difficult to implement anything beyond the Act. Now, just now, we were talking about Section 470, power to remove difficulties. So it was actually discussed in the ministry that how to come out of such a situation if the ministry wants to implement something for the benefit of the society, for the benefit of the nation. Then it was thought that yes, we should have the power to make rules, to make or to prescribe any limit, etc., for the development of the nations. So that's why these things have come in the legislation, that the central government should have the flexibility to make rules or to prescribe anything which is required for the development of the country. Now, the Act, of course, provides opportunities. Challenges are there, but we all have to come out of all the challenges. You have seen the challenges in the year 2006 also, when the MCA 21 system was implemented. There were a lot of agitations at that time also, but everything was brought into control. And now I think most of the people are very happy with the MCA 21 system. So like this, now also with the provisions of the 2013 Act, we will all come out of the difficulties. The Act is prospective. The ministry has already issued a general circular number 8 in the year 2014, and the financial statements, auditor's report and board report for the financial year, which commenced up to 31/3/2014, shall be governed by the Companies Act 19. So it's very clear, it's a prospective act. And recently, the ministry has actually issued the circular for waiver of the fees for event-based filings of the documents. There will be no additional fees for the documents due to be filed between 1st April 2014 to 30th April 2014, up to the delay of 30 days. Additional fees shall not be charged till 30th May 2014 or 30 days of the event, whichever is earlier. It is for the ease of the corporates, so that they can actually file after the dates also. And new forms are going to come. Earlier it was announced that it will come from 14th of the April, but now it will come from the 28th of the April. 39 new e-forms will be available on the MCA portal for uploading from this date. New concepts, of course, everybody has discussed, but briefly, NCLT is there, which is yet to be operationalized. NFRA is there, which is again yet to be notified, and of course concerns are there, though it's there now before the ministry to take a call. SFIO, it's again basically new powers have been given to the SFIO, specifically for investigations. Then one-person company, class action suits, insider trading, dormant